Welcome to today's stock market news update. Let's dive into the key stories making waves in the global economy and tech world. Starting with economic indicators from the United Kingdom, the Office for National Statistics released data on Wednesday showing that the country's yearly inflation rate stayed at 3.8% in September. Economists surveyed by Reuters had predicted it would climb to 4% from the 3.8% seen the month before. This inflation figure could influence market expectations for interest rate changes by the central bank. Shifting to international trade developments, Japan's exports grew by 4.2% in September from the same time last year, thanks to strong sales to Asia that helped balance out weaker shipments to the United States. This snaps 4 months of declines. However, this growth fell short of the 4.6% increase that Reuters experts had forecasted. Sales to Asia jumped 9.2% year over year, with a 5.8% rise to mainland China, Japan's top trading partner. But exports to the United States, Japan's second biggest trading partner, fell 13.3%. The country has been dealing with US tariffs, which hit car shipments hard, with auto exports to the United States down 24.2% in value for September. These trade shifts could affect global supply chains and investor views on economic ties between major countries. In another trade story, the United States might greatly reduce tariffs on goods from India as the two nations get close to a new agreement, which could lead New Delhi to buy less oil from Russia, according to a Wednesday report from the Indian media outlet Mint. Under the deal, Washington could lower tariffs on Indian exports to 15 to 16% from the current 50%, Mint said, based on 3 unnamed people familiar with the talks. Such a pact could reshape energy markets and trade flows, potentially impacting commodity prices and international relations. Moving over to big changes in the US workforce from the tech sector, leaked internal documents from Amazon have brought layoffs back into the spotlight, showing plans to replace or avoid hiring up to 600,000 US workers with robots by 2027, as reported by The Economic Times. The automation strategy aims for 75% robotic operations to cut labor costs by $12.6 billion between 2025 and 2027. Sources indicate that 160,000 warehouse jobs might be affected in the next 2 years. The company denies any large-scale layoff scheme, but confirms it keeps investing in automation to change its workforce in the United States. The documents reveal that Amazon's robotics and automation groups have laid out a plan to automate up to 75% of its warehouse and delivery network. This might result in as many as 600,000 jobs being replaced or not created by 2027. Marking one of the biggest workforce shifts in US company history. With over 1 million employees in the United States, Amazon's setup could change a lot in the coming years. Its fulfillment centers, once full of people sorting, packing, and sending items, may soon rely mostly on smart robots for routine tasks all day long. These moves could signal broader trends in labor markets and influence investor sentiment toward tech giants. Finally, in the world of artificial intelligence and online tools, OpenAI launched ChatGPT Atlas on Tuesday, a new web browser powered by artificial intelligence and built on its well-known chatbot, directly taking on Google Chrome's leading position, as covered by Reuters. This step lets OpenAI build on its 800 million weekly active users of ChatGPT, moving into more parts of people's online activities by gathering data on how users browse. It might speed up a bigger change to AI-based search, where people use chat-style tools that pull together information rather than old keyword searches from Google, heating up the rivalry between OpenAI and Google. This innovation could shake up the tech industry and affect how investors value companies in the search and AI space. That's all for today's video. Stay tuned for more updates and don't forget to subscribe.